All right. Hello, everyone, and welcome to our next presentation. Known for being able to teach anyone to trade in 60 minutes or less, Markus Heitkoetter has taught over 360,000 traders worldwide. He has appeared on CBS, Fox, NBC, ABC, and is the author of the best-selling book, The Complete Guide to Day Trading. Markus, we are so delighted to have you join us today. The floor is all yours.
Well, thank you so much for having me here today. So hope that everybody is doing great. And yes, I will get off the screen because we want to talk about markets. We want to talk about trading strategies, right? So what I want to do here in the next 30 minutes is show you a trading strategy that I personally use every day. It is called the PowerX Trading Strategy, and it is a powerful strategy for stocks and options. Now, let's talk about a trading strategy and the three main questions that a trading strategy needs to answer. And let me just make sure you can all see my screen. You can see my scribbling, what I'm writing on the screen. I think we should be good, right? Okay, so you see, we can make trading strategies as complicated as we want, but ultimately it boils down to three questions that a trading strategy needs to answer. And the first one is, what to trade? What stock or what options should I trade? The second question that it needs to answer is when to enter. So for example, Tesla, is it a good time to buy Tesla right now? Should we wait a few more days, right? So this is the next question. And then number three, we need to know when to exit. And when it comes to exiting, there's two ways to exit a trade. As you all know, I mean, if you have been trading or investing, doesn't really matter. So we can exit with a profit. And of course, this is what we always want, right? And then we can also exit with a loss. And this is where I think it is very important to have a stop loss. And a stop loss basically means that you set yourself a level on the chart and say, if the stock or the option drops below this level, I was wrong and I'm getting out. So what I want to show you here in the next 30 minutes, we'll mainly focus on when to enter. And if we have some time towards the end, we will also talk exactly about when to exit. Now, let me clean this up here a little bit. I'm not OCD, but I have OCD tendencies. So this is why I want to make sure that it all looks neat. Now, one of the challenges of trading strategies that I had in the beginning of my trading career were the following. Often I found trading strategies too complicated. I didn't understand when to enter, when to exit, because it all seemed to be too discretionary. There we go. Do you mean what I mean? There are some great traders out there and they say, oh my gosh, yeah, I bought into Tesla here. And when I asked them why, they couldn't really explain it. So this is where I also noticed that many trading strategies don't have clear-cut rules. And you see, for me personally, this is what I wanted to have. I wanted to have a trading strategy that is easy to understand and execute. I want to have a trading strategy that is mechanical, because I'm not a great discretionary trader at all. I'm a great mechanical trader, right? And therefore, I wanted to make sure that I have very clear entry and exit rules. Now, in order to have a mechanical trading strategies, I like to use indicators. And again, it's not everybody's piece of cake to use indicators. For me, they work beautifully. And today I want to show you the three indicators that I like to use for my trading. So I want to jump back here on a chart. And right now we are seeing a chart of the S&P 500. So as you know, this is when COVID happened and we crashed all the way down and then we went up. And the key question for me is, as a trader, first of all, is it possible to really know actually that the market comes crashing down? And then the other question is, how do we know whether the market is coming up? Now, I like to use in my trading three indicators. And the three indicators that I like to use, let's start with the first one. And again, I'm cleaning this here a little bit up. The first one that I would like to use is the RSI, and that is Relative Strength Index. And the Relative Strength Index I use it with a value of 7. So looking back over the last 7 days. So going back to the charts and the S&P 500, what you see here are daily charts. Now, these indicators might work equally well on 5-minute charts, 60-minute charts. I personally used to day trade a whole lot. I'm getting older. I'm 51 years old right now. And so as I'm getting older, I'm getting more relaxed. So I personally right now like to trade on daily charts. I like to look at the markets when they're closed in the evening and early in the morning and make my trading decisions then. So I want to plot the first indicator here. And by the way, the charting software that you see here is TradingView. Many of you are probably familiar with TradingView. If not, you can also do the exact same thing here on Think or Swim, on Tastyworks, on Schwab's E-Trade, Schwab's platform or E-Trade's platform. It doesn't really matter. So you see right here, right below the chart, the RSI with a value of 7. Let me just show you, see, length of 7. Now, as you know, the RSI is the relative strength index developed by Wells Wilder. I think it was back in 1970 something, right? So in the 70s. It used to show us back in the days overbought and oversold conditions. Now, I'm using it slightly differently. So what you see here in the middle is the 50 level. Now let's back off for just a moment. So the RSI is an oscillator that goes between a value of 0 and a value of 100. Now, here is how I like to use it. Whenever I see that the RSI is above 50, you see I'm shading my background green here, because it means that now a market is more likely to go up. And when the RSI is below 50, a market is more likely to go down. And we see it very clearly here when we look at the S&P 500. So here on October 26th, the RSI dips below 50 right here. And you see the market is actually going down for a few days. And then the RSI goes above 50 again. And the market is going up, as you can see. And ever since, the RSI has never dipped below 50. So that is pretty good. The challenge is that sometimes we are getting false entries with the RSI. Because one of the things that I have learned in my trading career is that one indicator is good. What's better than one indicator? 2 indicators, right? I mean, it's almost like standing on 2 legs. When you're standing on 1 leg, it's a little bit wobbly. When you're standing on 2 legs, it's definitely more stable. And this is where I thought it would be cool to have an indicator that confirms what I see here with the RSI. So the second indicator that I like to use is the stochastics. And now for the stochastics, I use a value of 14, 3, and 3. So let's go to the chart and let's see what it looks like. So here are the stochastics. And you see, when I look at the parameters, I'm looking at the percent K, 14, the percent D, 3, and the smoothing indicator of 3. It doesn't matter what charting software you have, whether you're having TradeStation or TradingView or Tastyworks or Think or Swim or EdgeSmart. It doesn't really matter. All you need to do is configure these 3 values here. And now I'm also looking at the stochastics, and you see here, I'm doing the same thing. The stochastic is another oscillator that goes between 0 and 100. And I'm just cutting it in half. So, I mean, I know that there's many other ways to use the stochastics, but hey, you're here to know how I'm using it, right? So I'm using it where I'm using the 50 level. So the same here. Whenever I see that the stochastics is crossing the 50 level, it is more likely for the markets to go up. And when the stochastics is crossing below 50, it is more likely for a market to go down. And when I say market, I mean market or stock or Bitcoin or Forex. It doesn't really matter, right? I mean, anything, this works universally for any market that is out there. So if you want, we can take a look at cryptocurrencies later here as well. So again, what I want to see is that this indicator, the second indicator, is confirming the first indicator. So therefore, I want to see, you see, sometimes the RSI fires a little bit earlier, as you can see here. Let me just draw a vertical line So as you can see right here, the RSI starts to dip above 50. You see on this bar already. However, the stochastics is still below 50. And what I found in my trading when I'm using two indicators, I am eliminating a lot of false signals. Now you might say, well, Markus, if you're waiting for too long, you might enter actually too late. But you see, for me, it's always a payoff entering too early or having a higher accuracy. And originally I am from Germany, so I like precision and accuracy. So I'm willing to rather enter a little bit later, because usually we see a really nice, strong trend here after we see that the RSI and the stochastics are moving above 50. Is this making sense thus far? Just want to make sure that we are not going too fast, because again, I have a lot to cover here in 30 minutes, but I also wanted to jump right in. As you can see, I don't have any charts or slides prepared, because I thought we can work on the charts right away. All right. So, well, if one indicator is good and two indicators are better, what's better than two indicators? Three indicators, you guessed it. So I wanted to see if I can improve my accuracy even more by adding a third indicator. And for the third indicator, I decided on the MACD, the moving average convergence divergence, developed by Gerald Appel, I believe also back in 1970s, 1980s, somewhere around there. Now, for the MACD, you also have to specify three parameters. And the parameters that I like to use here is 26, 12, and 9. So let me show you what this looks like on the chart. So I'm plotting the third indicator, which is the MACD, and I'm just quickly showing you the fast length is the 12, the slow length is the 26, and the signal smoothing is the 9. So to be more accurate, I can probably just say, okay, the 12 is first, right? And then we have the 26, there we go, and then the 9. Now, here is what I want to see for the MACD. See, you have the actual MACD, and then you have a signal line. So the MACD here is the purple line on my charts, and then we have the orange line, and the orange line, it's the signal line. And here's what I would like to see. Whenever the MACD is above the signal line, so when the purple line is above the orange line, it means that now it is more likely for a stock to move up. And whenever it is below the signal line, so the purple line is below the orange line, it is more likely for a stock to go down. Now, notice, I'm saying more likely, because as traders, we can never predict what exactly a stock is doing, and we don't have to, right? Because my plan is here, what is the market more likely to do? Is it more likely to go up, to go down, or to go sideways? Because after all, these are the three directions that a market can have: up, down, or sideways, right? And this is what I'm looking for right here. So let's jump back on the charts. So basically what I would like to see is that all three indicators are confirming each other. So in order to have my exact rules, I want to see that the RSI is above 50. I want to see that the stochastics is above 50. And I want to see with the MACD, that the MACD is above its signal line. If all three are given, this is when it is more likely for a stock or for a market, because it doesn't matter whether you're trading stocks or Forex or cryptocurrencies or options, it's more likely for a market to go up. So, and this is why I made it even easier for me that I visually color my bars. You see, whenever you see that the bars are colored green, as they are right here, it means that all three conditions are met. So let me just actually plot a text here really quick and say, okay, green bars means all three criteria for buy are met. So there we go. And this is supposed to say green bars. And again, I just gave you these three criteria. So what exactly are these three criteria? The RSI is above 50, the stochastics is above 50, and the MACD is above the signal line. Now, I'm also, I'm gonna, let me see if I can plot more text here. then I also have red bars, right? So red bars means that all three criteria, just write down, all three criteria for a sell are met. Now let's talk about this, and I'm also gonna make this red. There we go. Okay, so what are the three criteria for a sell? Well, let's go back here. This is where, again, we're looking at the three indicators. And if you're turning everything exactly around, so if the RSI is below 50, the stochastics is below 50, and the MACD is below the signal line, you see, trading doesn't have to be that complicated. Then it is more likely for a market to go down. So this is where these are my criteria. Let's just actually see. Oops. There we go. If we can make this red here as well, why not? Since we are taking notes, we might as well have beautiful notes. You see, for me personally, colors make it easier. Everybody is different. I mean, for some of you, you might say, why the heck are you coloring it? Well, I am a very visual trader. So for me, I like to, let me just show you, I actually had a mug made that says, trade what you see, not what you think. I don't know about you. I'm not that smart. So whenever I trade what I thought, didn't work out for me. Whenever I traded what I see, where I see my beautiful colors, that worked out well. Right, so back here to the presentation, if you want so. So anyhow, now we have also black bars. So what the heck are these black bars that you see here? Let me see, can we just, there we go. So black bars mean only two of the three criteria are met. And this basically means if only two out of these three criteria are met, it means that there is indecision. The market hasn't decided whether it wants to go up or down. So let me just plot these black bars right here. There we go. Okay. So this makes it visually, for me, super easy to see, is a market more likely to go up, down, or sideways? And I will show you exactly how you can use this in your trading in just a moment. But let's come back to the beginning of the presentation where we said, okay, is it actually possible to predict something that we had in the beginning of the coronavirus crisis, that the market would crash? Now, in order to do this, I'm just going back to February 2020. So as you can see here, this is February 2020. And you see the market was in an uptrend, and then we had black bars. And what do black bars mean? It means that now it is more likely for the market to just go sideways or maybe even turn around. And you see, a few days later, now we knew that the market was in a solid downtrend. So it was very easy here. If you would have just used these three indicators to see already on February 21st that something is coming. Of course, we never knew what is coming, but it gives us an early warning signal. And you don't have to be a genius to interpret in the news to see what is happening. You could already see, oh my gosh, something is happening. And then once we got to February 26th, we knew, oh my gosh, the market is more likely to go down. Until when? And this was the question. I mean, when is it over? When is this down move over? Well, look at this. The down move was over on March 26th. Do you see there's three simple indicators? I mean, this here right now is not rocket science, right? I mean, these are indicators that are freely accessible to you and everybody. I just have been trading for more than 20 years, and I found that this is very, very reliable for me of knowing whether a market is more likely to go up, down, or sideways. Now, you might say, well, Markus, actually, you have missed that the market was going higher here. You know what? Maybe I did, maybe I didn't, because if we look at, let's see if I can actually draw. Not that good in drawing here. I want to see if I can draw actually a rectangle. Then you see that here, for most of the time, the market has just been going sideways. And what happens in a sideways market, right? You're not getting any money. You're not making any money. You're just hanging in there. So let me show you some specific trades that I did with this strategy, because you see, the strategy is actually so simple. All we need to do is wait for the first green bar, right? And when the first green bar appears, we buy. And then when the first red bar appears, we would go short, right? And how long do we stay in the trade? Well, this is where we apply a profit target and a stop loss, as I said earlier. But let me give you a few examples here. So one of the trades that I was looking at is DCP. So DCP, as you can see, this is where we caught this very nice uptrend. Here we see a green bar, meaning that all three indicators are now telling us it is more likely for a market to go up. RSI is above 50, the stochastics is above 50, and the MACD is above its signal line. So this is where the entry would have been right here. So let me mark this. Right? And how long does this uptrend last? Well, we'll never know exactly of whether it is right here, but you see this uptrend pretty much lasts until here. And then we see that we have another uptrend right now that is going on, which is happening right now. Okay, a few other examples here. AM, another beautiful trade where you quickly see, okay, this is one that I did here in November. So that's a trade that I took. AM, nicely moving higher until when? Until you see this black bar, because now you know it is more likely for a market to go sideways. Let me just show you one more example here. MUR is another trade that I did very, very similar just recently. And as you can see beautifully here, I mean, as you can see, this very simple strategy predicts uptrends as well as downtrends. Now, I know that we don't have much time today, so let me just talk about exits really, really quick. So in terms of exits, I like to use a profit target that is at least twice as high as a stop loss. So let's say that we are applying a stop loss of $200 per trade. In this case, I would always take profits as soon as I see $400 per trade, right? So I'm trying to make twice as much. As you can see, I'm not trying to be greedy. So in these trades, in these examples here, I think I got out right here. So I entered somewhere around here, and then I exited somewhere around here. So I'm not waiting until the whole move is over, and here's why. This is one of the things that I learned trading the markets for a long time. Don't be greedy, right? Because think about it. If you apply a stop loss of example, so this here an example of $200 per trade and a profit target of $400 per trade, then you can have actually equally winning trades and losing trades, and you still make money. Let me show you. So if you have 10 trades, right? And let's say that you have 5 losing trades. And on these 5 losing trades, you lose 5 times $200. You lose what? $1,000. Now, what happens with the other 5 trades? Now you have 5 winning trades. And these 5 winning trades, you make $400 on each trade. You don't have to go for 600 or 800 or 10 times the money, right? Because here you're making $2,000. And if you look at this, it's actually draw a line right underneath there. Then you see that after 10 trades, right? So the total profits, is still $1,000 because you lose $1,000. So let's make this in red, and you win $2,000. So what's left after 10 trades? You still have a profit of $1,000 after 10 trades. Not too bad, not too bad. See, this is my main message, right? Because I used to make it super complicated in the beginning of my trading career. And right now, my main message is to you as a trader who has been trading is keep it easy, right? Keep it easy, and especially keep it easy and trade what you see, not what you think. Okay, is this helpful at all? I know that we are going super fast and we have 5 minutes left, and I want to take these 5 minutes to answer any questions that you might have. By the way, you might see this here right behind me. If this was super fast and you said, oh, wait, I want to have these rules in more detail, I've written this book, the PowerX Strategy. So this is where I'm explaining it on what? 140 pages with many examples. If you're interested in this, I'll be happy to send you a copy of this book. All I ask is that you pay for shipping and handling, which is $4.95. And is that okay, Arena, if I tell them how to get the book?
Oh, absolutely.
Okay? So if you go, you see, I have a special link here, rockwelltrading.com/money show, because I really appreciate Money Show inviting me here to be with you for 30 minutes over the lunch break. Depending on where in the world you are, it might be evening, and you might have in your favorite mug an adult beverage. For me, it's still coffee. it's 1 o'clock here in Austin, Texas, where I am. So anyhow, if you like this strategy, would like to learn more about this, I'll be happy to send you a copy of this book for $4.95. And there you go. Now, I know that we have 5 minutes left. Rena, do we have any questions that would be good to answer right now?
We do. All right. So the first one comes from John. He wants to know, do you have your trading set up so that the trades you found in the closed market hours get put on automatically when the market's open?
That is a great question, right? No, I put them on in the morning. So you see, I'm a full-time trader and investor. And as such, I don't have a job. So for me, it is 8:30 in the mornings when the market's open. You can actually place orders like stop and limit orders, right, before the market's open so that they automatically get executed. You can absolutely do this. But I personally, I watch usually the first 15 minutes after the market's open and place my trades right then. But I'm pretty lazy. After usually 15 minutes to 30 minutes, I'm also done and just enjoy the day. But great question. But you can use stop orders. So if you still have a job or you're otherwise busy, I don't know, maybe volunteering or you're on the golf course, right? You can absolutely use stop and limit orders to do this.
Awesome. Thank you. All right, next question comes from Alan. Do you look for any specific patterns when using these indicators?
You see, this is a great question. And you see patterns. I can see patterns in hindsight. I cannot see trading patterns while they're developing. You see, when you look at technical analysis, so technical analysis, you have two ways to analyze charts. Either you can use indicators, or as you say, you can use patterns, and patterns like, for example, candlestick patterns, right? Or head and shoulders, flags, pennants, all of this. I'm very, very familiar with these patterns, but I can't recognize them. So there's probably somewhere on this chart here, a head and shoulder pattern, probably. I can't see it. This is where it goes back to me, right? What works for me, keeping it easy. And for me, keeping it easy means using indicators, because indicators are super black and white. I believe that chart patterns still have room for interpretation. And I might be completely wrong, Alan. I mean, you probably know chart patterns really, really well. And if you do well with them, keep doing it. But if you're struggling right now, and if you're looking for something that increases the accuracy, just consider maybe this strategy. Just try it out and see if it works for you. If so, great. I'm not here to say, oh, you should never, ever use any chart patterns anymore and never, ever any fundamental analysis. And if you're not trading the PowerX strategy, you will lose your hair and your kids will leave you or never talk to you again. And your wife will leave you and your dog will leave you. No, I mean, I'm sharing what works for me. So take it for what it's worth. You are here for education, aren't you? So hope that helps.
What else do we have? Answer. All right. Next one comes from Trevor. How do you deal with false breakout and breakdowns?
Great question. How do you deal with false breakouts? They happen. Here's the deal. I mean, I still have losses. The key is keep your losses small, right? When you're keeping your losses small and you make more money on your winning trades than you lose on your losing trades, I mean, you could actually throw a dart. But by using these three indicators, it is putting the odds in our favor. And here's how I deal with false breakouts. If I was wrong, I'm out. So I never hold on to a losing trade for too long. I know my stop loss and my profit target before I even enter the trade. And this is something that I describe in the book. So right now we are running a little bit short on time. I'll show you exactly of how to identify the levels for your stop loss and your profit target based on the ADR, the average daily range. So check it out.
Excellent. We can answer a couple more if you'd like to keep going.
Sure, if you have some time. I know that we were scheduled for 30 minutes, and I know that I've 1 minute on the clock, but if we can go over for a few more minutes, I'll be happy to answer more questions.
We absolutely can. We don't have a hard stop.
Okay,
So
cool.
the next one comes from Lewis. He said, first off, thank you so much. I love the way you make it simple. Here's my question. Do you find that your strategy works equally well for day charts as monthly charts?
Day charts and what charts?
For day charts as monthly charts.
I personally trade on daily charts. I mean, we can take a quick look at this and see what happens if we switch over to monthly charts. I'm more of a short-term swing trader. So I'm usually in a trade anywhere between 5 and 20 days. That is my sweet spot. But that's actually a great question. So let's see what happens if we switch over to monthly charts. I could never hold. Let's actually take a look at the SPX. You see, one of the challenges is here. If you're switching to monthly charts, you're missing these smaller moves like the massive breakdown. And for you, this might be okay because if your time horizon is 3 to 5 years, right, then this is okay. For me, it is more 5 to 20 days because this is what I see in the markets. These days, markets are turning around quickly on a dime, and I want to be able to respond to this short moves. So this is why I personally prefer using daily charts. Making sense?
Absolutely. All right. So we have had a couple people asking if you can show the indicators again. And then this is a good one. Of your 3 indicators, do you have a favorite?
No, it's like kids. Don't have a favorite. You should love them all the same. Right? It's like your children. No, I don't. What I found works best for me is if I'm combining these 3 indicators. So whenever I just try to rely on one indicator, I'd even more false breakouts. And again, even with 3 indicators, you will have false breakouts. So here they are with the values. And again, feel free if you want. $4.95 doesn't break the bank, right? Less than a Starbucks latte. I like my latte with almond milk, and it always costs $5.65. $4.95 for this, and then you have all the rules in detail. All right.
Fantastic. Well, that is all we have time for. There are lots more questions here, but I did post the link to rockwelltrading.com/money show in the chat so they can easy copy and paste. But yeah, once again, thank you so much for joining us and for a fantastic presentation. You're back in March, I believe.
Yes, I'm back in March. And in March, I'm doing actually a master class, right? So we have 2 hours in March. Is that correct?
That is correct.
Yes. So we have 2 hours. So in March, I'll share a different trading strategy with you. So this was one of the trading strategies that I trade, and I have another trading strategy that I personally trade every day. And this is what we are sharing in the masterclass. It is a trading strategy for options. So if you're at all interested in options, or even if you're not interested in options, you should be interested in trading options. So make sure that you join the masterclass. Rena, what is the best way for them to sign up for this masterclass?
Just visit online.moneyshow.com and you'll see a listing of all of our virtual events, and you're going to want to go to the March Virtual Expo. And the website isn't launched yet, but you can pre-register and you'll get all the details as soon as we launch that.
And here is my name. Look for my name, Markus Heitkoetter. I know.
Exactly.
Take a quick screenshot. It's a little bit difficult to spell. I'm from Germany. That's why. Anyhow, Rena, thank you and the team from Money Show so much for having me here today. Thank you, everybody, for being here, spending this 30 minutes. I hope that you got a lot of value out of this, that you got some tips that you can use in your trading right away. And I'm always super excited being here, partnering with Money Show. Really appreciate you guys inviting me and being here and providing some value for you.
Absolutely. And thank you for joining us and for educating our investors and traders. We appreciate having you here.
All right.